Eunice Yoon joins us. She has the latest from Beijing. Overall, sort of, the sentiment has got to not be particularly positive right now, Eunice.
Absolutely not, David. It is very pessimistic over here. Shanghai has hit a 5-year low. Investors are bailing out of Hong Kong as well, especially Chinese property plays. The central bank's decision was expected, but it's just feeding into the growing belief here that the government is not willing to make any meaningful stimulus or take any big action to try to shore up the economy. In fact, most of the speculation around the non-action by the central bank was that the authorities are much more concerned about the potential downward pressure that they could put on the renminbi. The authorities here are very sensitive about the possibility of the renminbi moving quickly, especially when it declines, because they're worried about the potential for capital flight. The traders had been talking today about how state banks appear to have been making moves to try to stabilize the yuan, in fact, shore it up by selling dollars. And there were also some reports in the market today that the regulator has been making unofficial guidance to some of the local funds to come up with new equity products in order to stabilize the market. The state media has also been weighing in with the Xinhua, which is the state news agency, has been saying that really trying to debunk a narrative that we've been hearing, at least outside of China, that China, with all of its economic woes and its problems with its demographics, has hit peak China. And so Xinhua ran a piece today that said that it's an opportune time to pick China and not worry about peak China. Guys?
Eunice, I'm curious on the domestic front. I mean, it's been many years since I was there, but there was a great deal of interest amongst Chinese in investing. I remember this is years ago. They'd go into sort of almost parlors and buy stock and sell stock like it was horse racing. I don't know to what extent there is that kind of interest or enthusiasm, but what is sort of the mood and or the action on the ground amongst the domestic investors?
Well, the mood is not very optimistic. And in fact, I was talking to someone just yesterday about this, about where do you invest? And a lot of people here are really wondering where they can find any type of yield. The stock market doesn't look very good. Today, there was a lot of talk on the internet saying that, I've lost so much money. And that's the sentiment that I've been hearing just in conversations. Also, the property sector hasn't been doing well. So it's like home values going down. Where do you put your money? People have been talking about, where can they find investments overseas? But it's just gotten much more strict. And you could potentially be flagged if you take money out of the country. So it's a really, really difficult environment right now for average investors.
And I feel like we should separate both the near-term issues, Eunice, which you describe on the economy, the cyclical issues, and some longer-term structural issues. The number that stood out to me was that foreign direct investment actually went down last year for the first time in years. So it's not just investors that are worried about the economy, it's businesses worried about, big things like de-risking and geopolitical support. And I wonder how much of a long-term challenge that's going to be for China.
I think it's going to be a really big long-term problem. People have been discussing how they feel that the outlook for China just isn't very good when you look at all of those things, deflation, de-risking, demographics, debt, everything. So the outlook has been something that people are talking about, and one of the reasons why we're seeing all this money outflow from the Chinese markets.
Eunice, as always, appreciate your time and insights from Beijing. Thank you. Well, don't miss on the other side of this break. We're going to have Marriott's CEO and, of course, our live market coverage. That continues at all times. Back into this.